Income. It's what I call the driving force behind home loans nowadays. So let's chat about it. Now, of course, assets for down payment and reserves and credit are the other two main factors behind getting approved, but income is typically where most people seem to have issues. You don't have to have 20% down to get a mortgage, and there are even down payment assistance options available to some people. And to refinance a loan, you typically don't need to have any assets at all. And you also don't need to have perfect credit, but having an excellent credit score will certainly help you get approved and likely give you a lower interest rate. So there are basically two types of income, W-2 and self-employed. So for a W-2 employee, it can be very simple. We can simply use your base salary or hourly wage depending on how long you've been on the job and how many hours that you actually work. Typically 2 years is what an underwriter would like to see, but there are certainly scenarios where someone can qualify without being on the job for 2 years. Now, if you also make commissions, bonuses, overtimes, or tips, that's where it can be a little complicated. And almost always 24 months of that income that's not declining is needed and averaged out to give you your monthly amount. So think about it like this. No one, including you, really know what tips, overtime, commissions, etc., that you would actually make the next month or the forthcoming months. So a history of it is needed to prognosticate what it might be in the future. Living in Las Vegas my whole life, I know that many people make tips here in town, and unfortunately, not all the tips are claimed, which can make it difficult at times for dealers, bartenders, and servers to qualify for the amount they would like to. Now let's discuss self-employed borrowers. First off, almost always there will be 2 years of filed tax returns needed to qualify. If you are simply a 1099 employee and file a Schedule C, the net profit after write-offs is what will be used to qualify, with some things added in like depreciation and stuff like that. But unfortunately, many people don't understand that net, not gross, is used to qualify. They might have a really good CPA that is able to get their tax burden down for them, but it ends up hurting them when they come to us to try to qualify for a home loan. And if you file corporate tax returns, it's basically the same things needed, and net is used to qualify. If you have 25% ownership in any corporation, you will almost always have to provide those tax returns for the corporations, even if there's no income or little income at all. An underwriter is going to want to see them. So bottom line is that everyone needs to know that income is what the lender, you're showing the lender that you were able to pay off the home loan you're trying to get. And sometimes what you actually make might not be what actually can be used to qualify you for a home loan. So it's always prudent to call a mortgage professional like me right away to determine what you actually will qualify for. Call us at the number below.